Hello, our lecture is absorption accounting. In this lecture, we discuss about the absorption concepts, how to decide the purchase consideration in absorption accounting, and examples. To complete the uh, process of the absorption, which steps are followed in the absorption accounting. Myself, Dr. Naneshwar Marathe, Pratap College, Amane. What is absorption? To know the absorption in this accounting, the absorption is occurs when one existing company, that is purchaser company, transferee company, takes for the another company, that is a transferor or seller company, which suggests stop the all the its transaction. So this process is called the absorption accounting. For example, suppose a company takes for acquired the another business, that is B Limited. In such a case, A Limited continues its all the business operations, and B company will be cease or stop its all the business operations. In such a case, in the absorption, there is no formation of new company. So a company takes over the B company. In such a case, there is no new formation. A company continues its all its business operations uh, normally. Assets and liabilities transferred to the agreed value, which is decided both the companies, that is A and B company, decide the liquidation process of B Limited. In such a case, assets and liabilities are taken over. Suppose assets and liabilities are taken over at the book values. So in such a case, A Limited take over the B Limited assets and liabilities at book value or face value. But there is a provision of the appreciation and depreciation of the assets. In such a case, in this company will be calculate the depreciation value and appreciation value, and then absorption process will be start after the assets and liabilities uh, agreed valuation in the process of absorption. The core concepts of the absorption. In absorption, you have two primary players. The first player is transferor company and second player is transferee company. The transferee company means the purchasing company. A company, in this example, suppose A company takes over the B Limited. In such a case, A company is a purchasing company. The A company is an existing company that continues to exist and takes over the assets and liabilities of another. The transferee company, the vendor company. In such an example, the B Limited is an existing company that is absorbed and subsequently dissolved. In this absorption, there is a two companies. One company is a purchasing company and another company is a vendor company. In absorption, to know the absorption easily, we differentiate absorption and amalgamation. In absorption and amalgamation, there is some kinds of the features. The first feature is in case of amalgamation, new company. In a case of amalgamation, A and B company come together and form a new company, that is C Limited. So in case of amalgamation, there is a formation of new company, that is C Limited. In absorption, in this absorption process, the A company and B company decided to absorption process. In such a case, A company take over the B company. In such a case, the B company will be liquidated and A company survive and continue its own business regularly and normally. The company's liquidation. In case of amalgamation, both an A and B company are decided to amalgamate, but in such a case, the both the companies are required to liquidation process. In case of absorption, only B company will be liquidated and dissolved. Dissolve is not a proper word. There is a liquidation of company. In such a case, the dissolution word is utilized for the procedure for the dissolution of the partnership. Objectives. In a amalgamation side, joining forces are come together because A companies have the some kinds of the strengths, and there is a and also weaknesses, and B companies also have some strengths and some weaknesses come together, and they form with a new company, and these companies both the good things come together and overcoming the their weaknesses. New company will be started with the joining forces. In a absorption situation, there is a expansion and eliminating the competition between the two companies. Suppose A company is strong in business, B company is strong in business, but A and B company management decided to resolve the issues between the two companies, and they positively come together, and B company will be dissolved and A company will be continue. In such a case, there is a expansion of the business. In such a case, the B company, if the dissolve, if sorry, it will be liquid if it is liquidated, but the both the companies positive things come together. There is no need of the formation of the new company, so it will be the saves the time and money also of the absorption process. So easy absorption process will be easily completed. The absorption key features. The absorption in this absorption, there is a definition. Absorption is when one existing company takes over the another existing company, and latter losses are separate identity. In absorption, A company continues the business, but B company, its a separate identity will be stop or cease. So one company continues its own business. There is no difficulty of first company to run the business. Survival of the companies. The feature of the in the absorption, there is a survival of the companies. Only absorbing company continues to exist, and absorbed company ceases to operate the independently. Transfer of assets and liabilities. All the assets and liabilities of the absorbed company are transferred to the absorbing company at agreed values. All the assets and liabilities are absorbed by the first company, and the first company continues its business. There is a decide the assets and liabilities value on their between agreements. Purchase consideration. The absorbing company pays consideration in the form of the cash, shares, or debentures, or combination or mix also. The shareholders of the absorbing company will get the purchase consideration in the form of the cash, shares, or debentures. Then shareholders position. In this absorption, shareholders of the absorbing company become the shareholders of the first company, that is A company. So absorbing company shareholders gets the shares, if gets the shares. Suppose the absorbing company gets the total cash purchase consideration, there is no the old company, that is B company shareholder, doesn't become the shareholders of the A company. But suppose the purchase consideration is discharged through the shares value. In such a case, the absorbing company shareholder become the shareholders of the A Limited. Accounting treatment. This is the important thing while the absorption. The similar to amalgamation in the nature of purchase, there is nothing difference in the amalgamation accounting treatment and absorption accounting treatment. Suppose the assets values are more than the liabilities. In such a case, there is a arising of the capital reserve, but liabilities more than the assets. In such a case, goodwill will be arise depending on their PC or net asset method. Legal entity or identity. The absorbing company is dissolved without the winding up, that is meaning the ceases or stop the transaction of the B Limited, and A company limited continue the business. Objectives of the absorption. It is often to undertaken to achieve the economies of scale, then combining the forces of the business, remove the competition and expand the business and market share. So absorption is a easy method. Absorption is a naturally based way to run the business activity competitively and get the advantages of the competitiveness in the form of the profit maximization of the wealth. So absorption is a best method. Absorption versus amalgamation. There is a basis, some kinds of the basis of absorption and amalgamation. There is a distinctions and there is a differences. In the form of the definition, in the absorption, one existing company takes over the another existing company, that is absorbed the company loses its identity, that is B Limited. In amalgamation, two or more companies come together and form a new business, new company. Both the companies absorbs and both the companies will be liquidated. Survival of the companies. One company absorbing the company continues to exist, the absorbed company ceases to operate. A company continues its business and B company lost to existence. In amalgamation, both the companies A and B Limited will be dissolved and newly company will be started, that will be the C company limited, and the newly company, that is C Limited, will continues the business. There is a this is amalgamation. Legal identity. Absorbed company is dissolved without the winding up, and in case of amalgamation, all the amalgamating companies are dissolved and new entity may be created. Purchase consideration. The purchase consideration paid by the absorbing company to shareholders of the absorbed company. In case of the amalgamation, paid by the new company serving the company to shareholders of the amalgamating companies. Accounting treatment. Similar to amalgamation in the nature of purchase, goodwill or capital reserve may be arise. In case of amalgamation, accounting treatment can be in the nature of merger, the pooling interest or purchase, that is acquisition method. Objectives. There is a absorption, some objectives: achieve the economies of scale, expand the market presence in the business. In case of amalgamation, there is objectives often to undertaking the consolidate the resources, diversify the or restructure the business operations. Examples: A company absorbed, this is we discussed already. The A company absorbed the B company. In such a case, A company continues the business and B company is not required to liquidate, continue with the A business. In such a case of amalgamation, company A and company will be come together and form a new company, that is C Limited or AB Limited. So in this case, the new company will be created in the form of amalgamation. There is some kinds of the key takeaways in the absorption. and amalgamation also. In absorption, one company survives and other companies loses its identity. In amalgamation, two or more companies combine, either new companies form or one business continues. In the strategic motives, both the aim of both the companies have the both the case, both aim is at consolidation, but absorption is more about the dominance, while amalgamation is about the pooling the resources come together. In accounting impact, absorption is treated like the purchase. Amalgamation can be treated as a merger of purchase depending on terms. In the process of absorption, the purchase consideration concept. Purchase consideration is the agreed paid price by the purchaser, that is A Limited, to the sellers, to B, that is B Limited. Shareholders for the net assets takeover. In a lump sum method, there is a directly deciding the amount of the purchase consideration in a lump sum way. In the another method, that is net asset method, this is another famous method of the purchase consideration. Liabilities at agreed values. In the agreed values, there is a provision of depreciation and appreciation of the asset. In the liabilities, there is also the appreciation and payment of those part of the payment of the liabilities or loans and advances. So there is a net asset methods. All assets are considered with the revised value and minus the all liabilities considered with the revised values. That is a net asset method. In the net payment method, actual payment are listed on the basis of the number of shares, in the number of cash. So number of shares will be discharged through the particular price. It may be the share issued at par. That is example, we can take the example. Suppose 100 rupees shares issued at 100 rupees, that is at par. Suppose 100 rupees per share issued at 110, that is a 10 rupees is issued at a premium. Suppose a 100 rupees share considered the value 95, there is a 5 rupees is at a discount. To understand the easily and effectively, we have this simple example of the absorption. In this absorption, we have the under the S14, we have the scenario of the A and B Limited. In this case, A Limited absorbs the B Limited, that is transferor company. In this case, B Limited will be liquidated and its business will be moved into A Limited. The financial position, the first step is the financial position. A and B company, in this example, the balance sheet is given as on 31st March 2025, both A and B Limited. In such a case, the equity shares of A Limited, that is a 5 lakhs share capital, and B Limited 2 lakh rupees share capital. General reserve of A Limited 1 lakh rupees, B Limited is a 50,000. Sundry creditors of A Limited 2 lakh rupees and 1 lakh rupees B Limited. Fixed assets. The fixed assets of A Limited 6 lakhs rupees, B Limited fixed assets are 2 lakh 50,000. The current assets of A Limited 2 lakhs rupees, current assets of B Limited, that is 1 lakh rupees. The balance sheet tally of A Limited 8 lakh rupees, balance sheet of B Limited tally on the amount of 3 lakh 50,000. There is a terms and condition regarding to the procedure of the absorption. The terms are given. A Limited agrees to absorb the B Limited on the following terms. A Limited will take over all the assets and liabilities of B Limited at book value. The purchase consideration, A Limited will issue 3 equity shares of rupees 10 each for every 2 shares held in B Limited. So This is a procedure of the purchase consideration and take transfer the assets from B to A limited. The purchase consideration calculation, step by step calculation. Step A, the calculate the purchase consideration, the net payment method. Existing shares in B limited, 2 lakhs rupees, it will be the calculated and discharged to the rupees 10 per share. So 20,000 shares of the B limited will be given through the ratio of 3:2. So we can calculate new shares of to be issued. 20,000 shares will be given 3 and divided by 2. 20,000 into 3 divided by 2, that is a 30,000 shares will be issued to the B limited shareholders. This is a value of the PC. 30,000 shares into rupees 10 per share, this is a 3 lakhs rupees. Step B, net assets acquired. Total assets of B limited rupees 3,50,000 is given into the balance sheet. 2,50,000 of fixed assets and current assets of 1 lakh. That is a current asset plus fixed asset, that is a 3,50,000. So 3,50,000 come, and less liabilities, external liabilities. The B limited external liabilities are the 1 lakh rupees of the sundry creditors will be the deduct from the total assets. The 3,50,000 minus, so 3,50,000 minus 1 lakh rupees, that is a 2,50,000. Step in this steps, the C, the goodwill or capital reserve. Since A limited is paying 3 lakhs for the business worth only, so 2,50,000 will be considered is lesser than the 3 lakhs rupees. The goodwill is equal to PC, purchase consideration minus net assets. Therefore 3 lakhs minus 2,50,000, there is a goodwill. This is a positive amount because liabilities more than the liabilities are less than the assets, so 50,000 is a goodwill. Journal entries. In the fourth stage, while we complete the procedure of the absorption, the fourth stage is complete the accounting treatments. In such a case, all the first payment the purchase consideration. The first entry is business purchase account debit to liquidators of B limited. In such a case, the purchase consideration value is 3 lakhs rupees. In such a case, so business purchase account debit 3 lakhs rupees and purchase consideration it will be the given to the B limited. So in this case 3 lakhs will be credited to the liquidators account. So to liquidator B limited account 3 lakhs rupees. Another journal entry on the 31st March 25, the fixed assets and other assets will be transferred with the liabilities. So fixed assets account debit, fixed assets of B limited 2,50,000, current assets account debit rupees 1 lakhs. Goodwill, the balancing figure 3 lakhs minus 2,50,000, that is a 50,000 is goodwill, we calculate already. Goodwill account debit, that is a 250,000. So 2,50,000 plus 1 lakh plus 50,000, there is a 4 lakh. So sundry creditors account 1 lakh, to business purchases 3 lakhs. So both the sides of total is a 4 lakh. This is this 4 lakhs and this 4 lakh. Then last journal entries to payment the purchase consideration. Liquidators, here we liquidators account we have credited. In such a case, liquidators of B limited account debit to equity share capital 3 lakhs being discharged of PC via shares. In this example, the purchase consideration will be discharged through the shares. Then next is post absorption balance sheet. In this situation, the new balance sheet will be prepared of the A limited after the absorbing the company. The Share capital, the 5 lakhs rupees old share capital of A Limited. Now the A company limited taken over the B Limited with the purchase consideration rupees 3 lakhs. The 5 lakhs plus 3 lakhs, that is the 8 lakh rupees share capital. The goodwill. For the asset side there is a 50,000. We already calculate and discuss about this. Fixed assets, 6 lakhs rupees of already of the A Limited and 2 lakh 50,000 of recently of the B Limited. 6 lakhs plus 2 lakh 50,000, that is 8 lakh 50,000, and remaining amount will be shown on the liability side, that is a capital reserve. Realization account. To complete the process, the realization account is prepared. The realization account is given all the assets are transferred to the asset sides and all the liability transferred to the credit side. So remaining value, consider the purchase consideration, that is 3 lakhs rupees, and profit for the equity shareholder 50,000. So the balance sheet will be tally at rupees 8 lakh 50,000. Key takeaways: while we are observing some kinds of the precautions we require to take over, absorbing the absorption simplifies the expansion of the business without starting the new company. In the absorption, compute the purchase consideration accurately using the net assets methods for fairness. In this method, you the realization account create for the transferring the assets and adjust the provisions or expenses. Post absorption balance sheet combine the assets and liabilities at the fair value and deciding value as per the accounting standard 14. Journal entries are amalgamation and absorption. In absorption, in case of the absorption, the one company survives and another company loses its identity, so closing company journal entries will be required. So only A companies require, only A B company require the realization account to close the business. In case of amalgamation, both the companies required to required to close the all the assets and liabilities accounts, ledger accounts. So there is a requirement of the both the companies realization account. So in absorption, the shareholders are absorbed by the company. The A company shareholders adding the B company shareholders. Now the B company shareholders become the A company shareholders. Accounting standards 14 and Indian accounting standard 103 treatments depends on the whether it is the nature of merger or purchase. Thank you.